Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go over the March 2022 monthly housing market trends report to show you what the existing homes are doing. This isn't the new homes, it's not the housing starts or the permits, which I do at a different time when those come out, and that's usually mid-month, late month when those come out. This usually comes out the beginning of each month of the last month of how the housing market is doing. So we're going to look at inventory, house prices, days on the market, and etc. Those that information to see how the housing market is doing, the real estate market. This is residential real estate, and we'll step through this together, and it's not going to take too long. So here we go. What we've got is the active listing count. The active listing count continues to drop. It's down 18.9% year over year for March 2022. And this is, remember, 2021 was a very tight year, and we are dropping even tighter than the year before. This is active listing count. So this is homes that are available to buy on the market. It is declined last month by 19%. What does this mean? It means that the market's inventory continues to tighten. It means that home prices will likely continue to rise higher. The market is still short a lot of homes as the inventory continues to get eaten away. When we come down here, this is newly listed homes. Newly listed homes is down 3.4% from the year before. I don't really worry too much about this. I'm looking more at the balance there. Pending listing count, not a big deal here. And then I'm looking at days on the market. This is an important one that I watch. Days on the market are moving from last month 11 days faster than the year before. So the inventory has less and it's moving faster. So the prices definitely are too low to be building inventory. So what we need to do is we need to build a lot more new homes. That's what I think is going to fix this problem. Now, the median listing price, and I thought we were at a bubble, guys. I thought we were in this big bubble that everyone's telling me about. But the listing price is up 13.5% year over year. My guess was somewhere between 10 and 20% is where we were going to land throughout this year. And that is about right. We're about 13.5%. And I thought, yeah, it's going to slow down maybe a teeny bit, but it's still going to go up a good amount. Well, there's the proof in the pudding at this moment, and we're probably going to come into a strong buying season, and we'll see what happens. We'll see what happens. And I don't really look at some of these other ones. I don't focus on those other metrics. Those are the big three: active listings, days on the market, and price. Looking at here, it says the national inventory of active listings declined by 18.9% over last year, while the total inventory of unsold homes, including pending listings, declined by 12.5%. The inventory of active listings was down 62.3% compared to 2020, right on the onset of COVID-19 pandemic. In other words, for every 5 homes available for sale in the earlier period, today there are just 2. Newly listed homes were down 3.4% nationally compared to a year ago, and down 5% for large metros over the past year. Sellers still listed at rates 12.2% lower than typical 2017 to 2019 levels prior to the pandemic. The March national median listing price for active listings was $405,000, up 13.5% compared to last year, and up 26.5% compared to March 2020. In large metros, median listing prices grew by 9.1% compared to last year on average. Nationally, the typical home spent 38 days on the market in March, down 11 days from the same time last year and down 21 days from March 2020. Inventory may see growth by summertime, is what they're saying. Nationally, the inventory of homes actively for sale on a typical day in March decreased by 18.9% over the past year, a smaller rate of decline compared to the 24.5% drop in February. This amounted to 89,000 fewer homes actively for sale on a typical day in March compared to the previous year. The total number of unsold homes nationwide, a metric that includes active listings and listings in various stages of the selling process, that are not yet sold is down 12.2% from March 2021. This is also a smaller rate of decline compared to last month's 15.3% decline. If current trends persist, as we may see active and total listings grow over last year by June or July. And what that means is that if you look at the seasonality, that we are declining in the beginning of spring, March, April, and then it starts to increase over the summer months for our active listings, which is completely normal and is seasonal throughout the year. So that's what it is for real estate, guys. I just wanted to touch on that. I know we've got a lot of people saying that we are in a bubble, although that the active listing counts continue to decline. Our inventories are declining. Our inventories are moving faster, and home prices are up over 13% year over year. So when I look at this data, I don't see a bubble. A bubble is when your inventories reverse. So what I would like to see, or what I want to see if it's a bubble, if I was a bubble guy, your active listings are going to have to go and be up here. That's going to take, I think, at least, I don't know how many years to get that back up into bubble territory. So we're going to first have to, the first step is a slowing of the rate of change, which is, it is happening. There is a slowing of the rate of change. I agree with that. But we're still going to go higher until we stop going higher. So the rate of change is going to have to slow and reverse at some point. That may take 3, 4, 5, 6, 7 years. May even be 10 years out. I don't know. But that rate of change has to slow first. Then we get to a 0 point, and then we go negative, where the rate of change goes, where we have to go negative. Our inventories have to first go up. They have to first go up. We have to go up to levels that are like 6 months of inventory. All of these levels that are shown behind me, we have to exceed all of these levels. We have to go all the way up here somewhere, which means that we have to be adding inventory at very large quantities in terms of percentage terms. So if someone says your inventory was up 50%, well, when you're coming from an inventory that's below like everything in history, a 50% increase isn't that much. We have to increase inventory by 1,000% to get to a spot where we might have some, declines in prices. So it's going to take a long time, and I don't know how long it's going to take to get there. But all I do is I watch this. It's very slow moving. It takes a whole bunch of time. And as of this point right now, we are not in a bubble. Prices are going higher. Inventory is getting eaten up, and we are moving that inventory faster. So that's what the data is currently. That's where my what my opinion is on it, and that the bubble people are in their own bubble. I guess they don't know how to read inventory levels. So that's where I'm at, guys. Give me a thumbs up. And another thing, the mortgage rates do not matter. Doesn't matter what that is. What matters is the inventory. If mortgage rates goes up and we see it in the inventory numbers, that's all that matters. I don't care about what mortgage rates are. If the inventory continues to decline, the inventory or the mortgage rates do not matter. They do not matter. You don't even have to look at it, because you see it in the inventory. If the affordability of these homes get too high, like if they become unaffordable, we'll see the inventory start to replenish themselves. At this time, they're still too affordable. All right, guys, we'll see you next time. This is Finding Value.